investors are bracing for another roller coaster week on Wall Street. Futures have been volatile already this morning. We got a deal on the books. We got markets at the lows right now, down 40 points on the Dow Jones Industrial Average. And, of course, new worries over trade. That after the Dow closed down for a fourth session in a row on Friday amid fears over those new tariffs. Joining us this morning is Tiger 21 Chairman Michael Sonnenfeldt. Michael, good to see you. Thanks so much for joining us.
Thanks for having me.
How worried are your members about the trade issues?
They're concerned because they think it may be last century's war. The real war this time is jobs from technology, computerization, AI. That's where the real job loss is coming from. About 80% of the loss, only 20% from trade issues. So they want to make sure we're fighting the right war.
You know, the president has been saying that he wants to help the steel industry, help the aluminum industry, that they are faltering right now. But you see it differently. And also in the op-ed today from the Journal, they're basically saying it is what it is. There's one CEO from a steel company saying, don't look to this industry as a job creator.
Well, steel and aluminum have been losing jobs for decades. That's why we've had rounds of tariffs before, 2002 by President Bush, President Carter back in the 1970s. So this is really an old story, and it's not a big or important part of America's industrial base right now. As you say, technology is really what's driving American growth.
Yeah, and like an avalanche, a small amount, they talk about how small the dollars are, but a small pebble can start a big avalanche, and that's a trade war that we don't want right now.
Well, do you buy this argument? Wilbur Ross was on Maria's show this weekend saying this is just a few $1 billion in tariffs. It's a tiny part of the overall economy. Don't worry about it.
I don't buy it at all, because one thing can lead to another, and right now we have very delicate relationship with China and South Korea. We shouldn't be pinpricking and wondering where it's go. These are people that we need to be working with closely, given what's going on in North Korea and elsewhere.
So what does this mean for markets and investors? We had a big sell-off last week. Was this just a one-time sell-off, or is this the kind of thing that could turn a bull market into something that goes nowhere down?
We have a fragile market. It would be foolish to predict where it's going, but we know things like this can be like popping a balloon. I think if you look at the fundamentals right now, we were just digesting the benefits of the tax reduction. Everybody was sort of on a high with that, and so this seems to have popped that balloon a bit.
This is a self-inflicted error or wound, if you will, in terms of economic policy coming out of the White House.
Yeah.
But I'll point out that that a lot of the arguments that you've heard out of the White House the last several days, they're spurious. The steel industry last year, Nucor made a $1.3 billion profit. You go through the steel companies, and again, you're putting at risk 6.5 million jobs in steel-consuming industries in the United States, and to save 140 or 150,000 jobs, or to preserve them. And it's not just about steel, it's how all of these other nations react. And when you have the very job creators in this country, like the automakers, sounding a warning saying, hey, you've been putting pressure on us to bring jobs back here. You just did something that's going to cause us to go and seek cheap steel elsewhere. They're more likely to make cars in another nation, and you just handed a victory to foreign automakers.
Yeah, absolutely.
Are people investing alongside these themes? What are you seeing in terms of members and how they're moving their money right now?
So most of our members only have about 23% in public equities, and most of that is ETFs, precisely because they don't want to be market timers. The one area where they have specific concentration, Alphabet, Amazon, and Facebook, of course, Berkshire Hathaway perennially. But the point is, these are companies that can scale, and they're not worried. These aren't going to be affected by the steel tariffs. These are technology companies that are scalable without labor. So our members are not market timers, except the few who are real traders. Our members are focused on private equity and real estate, where they can roll up their shirt sleeves, touch and feel the asset, and most of those activities are not going to be too affected by these tariffs.
So you said that just then that you think that the market is slightly fragile. At the same time, are you telling people that they should be concerned? Are you saying people, this is for the long haul? What are your members feeling about all of this right now? And
Equal parts optimism and concern. And when I say that, over 70% of our assets are in risk equity and assets, real estate, public equity, private equity, over 70%. So they're optimistic about the long-term fundamentals. We have such strength in this country. Our legal system, our transportation network, our energy complex all gives us a real tailwind for success. So the last thing we want to do is see it screwed up by something that unintentionally escalates. It's not the $9 billion that Secretary Ross is talking about. It's what the reaction may be that may start going into other sectors that could really harm us, our members.
Again, I said this earlier, that's $5 to $6 million per steel job when you do that $9 billion math. How about every other worker, the millions of workers going, where's my payout to rescue my job?
I'm curious, why do you call them members and not investors?
Explain Tiger 21.
Yeah. Tiger 21, if you think of the Major League Baseball, football, basketball, those players are 1 in 17,000 people. Our members are 1 in 10,000 domestically and 1 in 100,000 globally in terms of accomplishment as entrepreneurs who have created great wealth. So our members come together every month in these private settings that allow them to discuss just what we're talking about, but in a totally confidential setting, and we bring in the world's best experts. We just had an annual conference. Condoleezza Rice was there, and Bill Miller was there, Charlie Ellis, Howard Schultz. And this is the place where really successful entrepreneurs come as they transition out of owning a business and becoming wealth preservers and wealth managers.
What are they saying about the crypto craze? I mean, even the marketplaces where you buy and sell digital coins apparently are posing a risk. According to the Wall Street Journal, investors lost nearly $1.5 billion after 2 major hacks at BitGrail and CoinCheck.
Yeah.
Bitcoin is a big topic for your members, right?
It is. But, you know, if you look at the auto industry, there were 100 auto companies that got consolidated with lots of volatility at the beginning of the auto industry. So this volatility in Bitcoin, this is a bold new beginning. It's Bitcoin, blockchain, and all the other cryptocurrencies. In fact, last week, I think JP Morgan finally acknowledged that Bitcoin and blockchain could have a material impact on their future business. It's going to change the world of finance. So our members are looking not just at Bitcoin. The volatility is just evident of the new market coming to being. This is going to change the way business transacts.
So these are leading entrepreneurs and people who started businesses who are saying, yeah, this is real. Jamie Dimon is wrong. This isn't a fad or a craze.
And he said he was wrong as well.
By the way, if you were in Venezuela or some other country, Bitcoin would be a lot more important to you when you're worried about government intervention and government interference and government controls. If there's a currency that can go past all of that, that's going to change the world.
All right, we'll leave it there. Michael will be watching that. Thanks so much. Michael Sonnenfeldt joining us there.